Let's break the chains of poverty by going over a strategy that the uber wealthy use to give PAID whether or not the underlying stock is moving to the upside or to the downside. It's called monthly dividend paying positions. And we're going to follow up with a list of quarterly dividend paying positions, the best in the S&P 500. We've done all of the homework, all of the heavy lifting for you, my beloved ASK THE WIZ Wealth Street family, so that you can get PAID and break every economic constraining chain. Now, family members and listeners alike, I need for you to pay very, very close attention to the information that I'm about to give to you. Monetizable information, information that will certainly aid and abet your efforts to obtain and maintain your economic liberation. Now, investments that make a dividend and pay a dividend every month aren't a hard sell at all. After all, who doesn't want a little extra monthly income to help tackle the monthly bills? But sadly, that's where too many investors believe the benefits end. Indeed, many still think that buying a security paying 10 cents per share in dividends a dozen times a year gives them the same long-term payoff as buying one that pays $1.20 in dividends annually. That idea couldn't be more short-sighted. Listen to me closely. Beyond the convenient payouts that monthly dividend stocks and funds provide, these frequent dividend payers often offer much more than most people realize when it comes to building wealth. Now, let me give you some excellent examples and reasons why you should love monthly dividend paying stocks. Number one, higher frequency leads to faster growth. I repeat, higher frequency leads to faster growth. Let me explain. You see, if you choose to wisely reinvest your dividends, assuming you don't need them to live on right away, you will ultimately make more money and build your wealth faster with a monthly dividend payer than with an annual dividend payer. Let me give you an example. Let's say I invest $100,000 in two securities that each paid a 7% annual dividend yield. Now, one pays dividends monthly and the other one pays once annually. Now, for simplicity's sake, okay, to make it super simple, let's also say these investments don't change in value over time, i.e. no capital gains and or no capital losses, and that I invest my dividends as soon as they're paid out to me. Well, after 1 year, the annual dividend payer, okay, would be worth $107,000. My original $100,000 plus the $7,000 in dividends. Okay? So it would be worth $107,000 at the end of the year. By comparison, the monthly dividend paying position would grow to $107,000 and $229,000. That's $229,000 as long as I reinvested my dividends each and every month and let them compound. That's $229 more growth than the annual payer in just 1 year. And as I continue to reinvest my dividends and let them compound over time, the rewards of the monthly payer only get better. And let's say after 10 years, you do the simple math. The monthly payer in this particular example would be worth $4,251 more than the annual payer. You see, the key here is that more often than not, people don't realize that when you reinvest your dividends, the more time they have to grow and compound. The second reason, less market risk. I repeat, less market risk. You see, when you buy an annual dividend payer, you only have 1 day a year to buy additional shares through a dividend reinvestment program or DRIP program. But what if that stock hits an all-time high price on that particular day? You could get unlucky and reinvest in shares at a higher price and get stuck with a low dividend yield. You see, a monthly dividend payer, on the other hand, lets us reinvest our dividends to buy shares 12 times a year, spreading out your market risk and letting you buy a few shares at a time. This gives you greater possibility of buying shares when they're cheaper as well, for higher potential returns if the security gains in value. So number 2, less market risk. The third reason, and I'm going to give you 4, the third reason why you should love monthly dividend paying stocks is, they just give you peace of mind. Peace of mind. You see, when I buy dividend paying stocks, I prefer to hold them for a long period of time. But sometimes the unexpected does indeed happen. That's called life. Maybe market conditions get too risky for a specific asset class. Maybe a company runs into trouble. Or maybe I suddenly need the cash for a personal emergency. I face difficult and expensive choices if a stock I own pays dividends annually and I have an unexpected situation that I have to deal with financially. For example, I'd hate to hold on to a stock for 11 months only to have to sell it right before its payoff date and miss out on the dividend income. I'd also hate to hold on to a problem stock just for its dividend. Who'd want that particular type of stock and those shares, that may fall, and then we're collecting less dividends per the fall of the particular stock underlying price. In contrast, a monthly dividend payer gives us easier decisions and greater peace of mind. And I, for one, certainly don't want to wait around as long for my dividend if I ever need to quickly get out of the investment. And I don't have to worry about payoff dates or missing out on dividends as much if I'm in a monthly dividend paying position. And the fourth reason I would like to give you, is convenience. You see, while I'm still using dividend reinvestment as the growth engine toward building my retirement fund, I'll eventually need to start living off that income from my portfolio. When I reach that point, my monthly dividend payers will give me a convenient way to pay my bills every month. I might use monthly dividends to pay the final mortgage bills, to pay off a particular piece of real estate. I also might use them to pay my monthly electric bill, my monthly cable bill, and or my monthly phone bill. You see, there are hundreds of monthly dividend-paying securities on the market, with more launching each and every day. Unfortunately, the vast majority of monthly dividend payers are fixed income securities, for instance, bond funds, which are interest rate sensitive and can lose value if interest rates go up. And the Fed has made it clear that sooner or later they're going to start increasing the Fed fund rate and interest rates. Stocks and ETFs that pay a monthly dividend are less common, but may be the better choice as they are less exposed to interest rate risk than bond funds are. So at the end of the day, as you might guess, I'm fond of monthly dividend paying stocks as they help me grow my retirement fund faster while also helping me sleep much, much better at night. And when I'm ready to stop reinvesting my dividends and start living off the income, they'll be handy towards paying off the bills every month that come around each month on time. 4 reasons why you should consider to absolutely love dividend paying positions. And hopefully you see the light as to why, the uber wealthy use dividend paying positions to get PAID. When we come back,